What's happening, guys? Another Sunday scan coming at you. This time it is for the 11th of January. We've got 1 week in the books, and it was an amazing one. So far, it's on pace, if not better, than 2020. So, the opportunities wise, how the market's reacting, just the way that these moves are continuing to go is second to none. And all these sub-dollar stocks going over $1 to 2 to 3. I mean, it's a great way to compound money. It's a great way to really build your account. And I really think that it's going to be quite an amazing opportunity throughout the year for traders. So make sure that you're staying familiar with a lot of different charts. But as always, make sure that you don't try to overdo it, right? So as you guys know, I have a big scan, and I have a lot of stocks that I'm watching. And the reason for that is because I get to stay familiar and be able to react much more quicker because I know what the chart looks like already. I'm already prepared. I already know what the key levels are. And a great example of that was LMFA on Friday, where there was a SPAC PR that came out and it was 83 cents. And so I reacted because it was on scan the prior days. There was a little bit of a daily trend starting to form. Just like I've got a bunch of stocks on here that have, daily trends starting to form. There's a huge potential opportunity if you're able to get in there quickly without really thinking about it. I already knew what my risk was right away, and I was familiar with the chart. And I was able to react that much quicker than somebody that has to kind of think about it, go back, look at the daily chart. Okay, my risk could be this. Maybe I'll try some. No, you're prepared because, yes, there's a lot of stocks that are on watch, but it's not to trade them all. It's just to kind of see them. And once you've seen them, you're able to react that much quicker when you're in the market. So that's a great example of just something as simple as seeing it on scan, Tuesday, Wednesday, Thursday as a potential, breakout type trade. No, you can't call the news. No, you don't know that's going to happen. But what you can do is be familiar and react that much quicker because you already know what the stock looks like. So when that news hit and I knew that it had been trending between 75 and 80 cents, that's a no-brainer. Even if it went down, what's the max risk? 5 cents for the potential of what turned into about almost $3 per share. Pretty crazy. So opportunity is at an insane high right now. And I just, I think that it's a great time to be a trader. And, as always, it's all about, making those plans, getting familiar with what's working, adapting to current market situations, being able to realize what's working, not what you think should happen or, this has ran too much. I can't believe this is happening. Getting rid of that thought. You've got to throw away a lot of stuff right now that, it might be hard for you to do so, but that's what adapting is. And what never worked before works now. What worked really, really well before will get you run right over. You just can't short, especially big names overnight. You're waking up with $3, $4, $5, $10 gaps. Look at Plug, for example. So you want to be super, super cautious. And, the last note that I want to kind of say about this market, if you're not compounding, if you're not doing phenomenally well right now, you need to reevaluate. You need to kind of think about what you're doing. You need to kind of think about what your process is. You need to think about, do you even have a process? Do you know what you're doing? Or are you just kind of like firing at will? And, if you're still doing the same thing that worked 6 months ago or 8 months ago and trying to, force those setups or those strategies to work, they're not working right now. You need to adapt. So stop trying to do what worked 8 months ago today. You have to adapt to what happens today. And while going through scans, going through charts, you can see what's working today. You know that 10, 20, 30, 50 cent stocks are crazy right now. You know that if there's a good chart on them and there's a PR, there's a good chance that they might go to $1 or $1.20 or $1.50. We know that. It doesn't take rocket scientists to know that, right? So when those things hit scan, when there's a PR, when there's high volume, They're on watch. Did I trade 50, 60, 70-cent stocks before at this pace? No. Did I own 5 or 10 different names or more that are under $1? No. But that's called adapting, and that's what you have to do in this current market. So if you're not doing well, review what you're doing. Stop trying to do the same thing over and over and expect different results, because it's not happening. And you need to make changes today, because a month's going to go by, 3 months is going to go by. All of a sudden, you're going to be looking back in 2021. You're going to say, had I just changed my ways, I would have done a lot better. That's not to say that the next week or two, maybe we run into an issue and there's a crazy squeeze or whatever. You're only as good as your last trade, right? So I'm not sitting here and saying that trading's easy by any means. It's not. But what is, the most important thing is trend joining right now and not fighting trend. If you're wrong, move on. The opportunity cost right now is just so high to remain wrong that you just got to move on. You got to get out and not really worry about, what you should have, could have, would have done. It's just about what's happening right now. And the second piece of that too is thinking bigger picture, right? You've seen a lot of swings that I've posted just start to compound and compound and compound. They start to go, consolidate, go faster, consolidate, and go even faster, right? Tiger, TIGR. You guys know exactly where we've been at with that one. And spelled out the entire thesis at $6 on Sunday Scan for you guys. And, you can see how it's starting to speed up. It's starting to compound. And that's the beauty of being on the right side and then letting that trade work with size, because you can't use what you typically might use as intraday size and try to be patient with it, because, there's a lot of range. But if you're in from low, you can let it work, and that's when you start to see the exponential returns. So not trying to be hard on anybody that is not performing right now, but it should be used as sort of a wake-up call for you if you're just kind of treading water, and it might be time to reevaluate where you're at, whether you're trading individually, whether you're part of a community. If you're part of a community that you're just chasing P&L and chasing other people's alerts and things like that, then you're not going to get anywhere. You're not going to have exponential returns. You're not going to be that outlier trader that you're trying to be. And the other thing too is you need screen time. So if you're just treating this as a hobby, if you're just trying to figure it out, trade on your phone and all that kind of stuff, it's just not going to happen for you. So don't try to make something of it, but not put your best foot forward. And for those of you guys that want to put your best foot forward, as you guys know, you're always more than welcome in our community. We have the resolution sale going on right now, which is New Year's resolution. Do something different, adapt, become part of a community, and hopefully you guys will find as much value as everybody else does. And it's why we are one of, if not the biggest. I'm not talking about the biggest room with the most traders, but the most veteran traders, the most real traders. Not all the types of people that are just joining to chase alerts and things like that. But the biggest number in one community of consistent, great traders, all sharing fantastic ideas. And as you guys know, we do a morning call every single day, 8:50 a.m. And going over, condensing this list to a very minimal, to 2 to 3, usually a top of 4 main watches, 2 off the open and then 2 a little bit later on. And that's about it. So we've got daily scans just like this one, and daily trade recaps, whether it be on a video, whether it be in the morning on the 8:50 a.m. call, sharing charts, answering questions in the Traders Lounge. We've got a lot of great traders in there that are answering questions left and right, as well as me via PM or whatever it is, whatever members do, whether they email me, PM me, it doesn't matter. A couple other thoughts too. For this video, I was thinking about, what leads to increased exposure, things that you need to be cautious of. And if you're always going bigger, right? And you just smash one trade and you go even bigger on the next one and even bigger on the next one. At some point it's going to catch up. So what I recommend to people usually is just to kind of think about, spreading it out. Take that money that you just made and spread it across a few different ones rather than just always doubling up and doubling up and doubling up. Because what happens is you end up taking, a big bath on one. And it's not just, okay, yeah, you gave some back, but sometimes that can throw you off and it can start to get you in that make back mode. And when you get back in that make back mode, it's never good. So you always want to spread it off, spread it off, spread it off, spread it off. And, that's why I end up with a lot of positions, because I adapt. And there's a lot of charts on Scan Tonight under the Staying Familiar. I'm spread across a lot of great charts. And, right now, there's a lot that are starting to compound. And there's some that are just going sideways. And then obviously there's going to be a couple that fail. But that's okay, because I'm not, concentrated in any one position. I'm continually expanding it across many. What else? One kind of thought that you could try, in situations like this. I see a lot of people get into a name and then they start thinking, oh boy, my stop's here. What do I do? It stopped going up. It's pulling back a few cents. Do I get out now, right? So, one thing that I told a friend of mine who was taking a lot of the same swings that I was, what are you willing to risk? This is your level. And, size in based on what you're willing to risk off this. So that way it was worth the $500 risk or $2,000 or $5,000 or $10,000, whatever level you are at, it doesn't matter. But put it so that there's no emotional attachment and you let that trade work. And then that way, okay, well, this was worth the $5,000 risk for the $50K reward. Think about it in an LMFA situation. Size in, for me, I'd like to size in whatever I'm comfortable with versus that 70 level. So if I'm willing to risk 5 or 10 or 20, whatever it may be to be right, it was worth the risk because that was chart support. Look back at the chart support and risk based off that level, size based off that level, and it's going to take the emotions out of the game and allow you to actually let this work. In trades like Plug, in big Riot, Mara, Riot had a huge trade last week. I think it was Wednesday. Huge opportunity. And same thing with Plug off the open and then intraday. But if you were not there, if you were trying to hold out for something more, you missed the trade. So when you start to trade size, it's not as big of a deal if you're not, trading size, but it still is, if you're trading the front side and you're trying to make money, contrary to the way that the name is moving, right? So Plug goes up 7, it pulls back 3, and then it continues to go on 4 or 5, right? Well, some of us are better shorters than they are, confidence-wise on the long side. So you might take 3x, 4x size on the short side, whereas you'd only be, just 1x on the long side. So you're going to make more in that $3 pullback than you would on a $7, breakout, right? But if you don't take it, if you're not prepared, if you're not ready for that flush, you're going to miss that opportunity, because what happens is there's like an air pocket and it flushes out. You need to be prepared. So sometimes I put ducks out there, right? And, ducks, you've got these wish orders essentially. So where would you wish that you could fill if it flushed out? And you'd be surprised that a lot of times it comes right into that level, flushes out, and for about like 10 seconds, you're like, I should have waited. I shouldn't have covered it. I knew it was going to go lower. And then all of a sudden it swipes back up and you're thankful that you had that order in. So that's what we call wish orders. And if you're trading contrary to the trend, it's always good to have some in there, because if not, you end up missing some of those flushes. And then that brings out the worst in you because you were just up huge and now you want to fight it. And it's just never good. Last two things, swing insanity. Obviously, Tiger, you guys know TIGR. Like I said before, spelled that all out, so I'm not going to go over it again. But incredible breakout, picking up steam, and it's working extremely well. So it's nearly a double at this point with the thesis that I spelled out. IDEX, great example of what's working right now. So Thursday, you saw me post the entry in the 220s or so, and went all the way up to 370s. Let's see, IDEX. They're all running together at this point. Yeah, so 389 it hit. And that's a great example, and I'll share that screen when I do the second part of this. But it's a great example of what's working, adapting to what's working. Things hit those breakout scans, pull back, consolidate, they start to hold. I like to risk based off the prior support. Same thing with TRXC and a few others that you'll see tonight on scan. And it's just an amazing time to let trades work. Last but not least, I say it every single week, meal prep and workouts. And you may think it's like you roll your eyes about it, but I promise you, if you start to put that stuff first, you're going to see a lot of different focus and energy and give you that extra oomph to get through the day and stay energized and focused on the trades, because trading can be draining. It's super draining. And especially if you're there all day, or if you're on the wrong side of a trade, or if you're just trading too much size, you're out of your comfort zone, whatever it may be, you end up being exhausted by the end of the day. Those two things can really help you stay at a better level, at a higher level, and you'll perform a lot better. So we've got something special on the second part once I get into picking the winner for this week, and we will go from there. All right, guys, so the second part of tonight's scan is obviously the watches for tomorrow. I will pick a winner in a moment, but first and foremost, everything that I start to say, that I talk about, are my ideas, my thoughts. I'm sharing them with you guys for educational and informational purposes only. And as always, Cam puts the disclaimer below so you guys can check it out. But understand that trading is not easy. You should not follow anyone. Every single trade is your own, and make sure that you have a plan before you have an entry. You don't have a trade if you don't have a plan. Rob Osorio from last week, you are the winner this week. So if you are in the US, last week I talked about Icon Meals, and I'm not paid to promote them by any means. I'm just sharing my good experience, and I've reached out to them, or Todd had reached out to me, but I had recently reached out to him and said, hey, what if I gave away a box of food, once a month, since I give away the t-shirts, the books, and the IU once a month. And he was game. So, Rob, if you're interested in that, and in the US, you've got a week worth of food coming your way if you're interested. If not, you could pick a shirt or a month at IU. So you just let me know, webmaster@investorsunderground.com, and let's get into it. LMFA, crazy one. Huge opportunity, great alert in the room right away. Got long 83 cents, 85, 90, you name it. Sold a good bulk of it a little too soon. It went straight into a halt, ran up to about 130, 140s, consolidated. We got that nice consolidation under the VWAP, and then it starts to come back up that we talk about. In the room on Friday, I was talking about what I look for, and two of the levels that interested me was right over here. You can see, and I purposely put the line a little bit higher because I feel like these were like a little bit of like a flush out and a catch. So I look for that flush catch. And so you can see that it essentially did that in this area right over here. So that's what interests me there. And then you'll see the same thing happen again right over essentially in this area. You can zoom in again, but you can see how it flushes out, catch, and then the next flush out ends up, pretty much holding. And again, it doesn't have to be perfect. It's just a general idea, the area, as long as it holds that area, and you can see that it flushed out, got caught, flushed out, got caught, came in again. This is the confirmation that we talk about. And now at this point, I like dips versus this line, which is going to give us, proper risk versus reward. So that was a great opportunity. You had the same thing actually happen after hours before the trap there. You could draw another line and see, exactly how that panned out. So you've got those flush outs to clean it up, one last flush out, and then the higher lows, and it continued on. So whenever I'm short a name, not in this case, but whenever I'm short a name and I see that stuff happening, I take note. And one thing when I want to get long, I look for that, or stay long, I look for that. The other thing too, if you look at this huge, this breakout over the high, and then it busts through it, comes back, you want to assume that it's going to fail. But if it keeps on holding, that's what I like to see. I like to see resistance become support. So huge breakout. I have some left long. Obviously, it was a nice one and great opportunity. I think they blew out a lot of shorts after hours. So, although this was a big move and although it could, look, it could go 4 or 5. I don't know. This market's crazy. But I want to assume that they blew everybody out after hours. So I wouldn't be surprised to see it back essentially in this area before it started to break out. So, in my eyes, I kind of use this as sort of my interest level. So I want to assume that we might end up in the 260s, 290s range, pre-market. And then if they flush it under a couple times and then catch, we might be going higher. It might be a nice little trap. But I'm assuming that everything over this line was just basically an after-hour squeeze. Somebody got on the wrong side. Somebody, could sense it, and they pushed them out. And somebody blew up, somebody margined out, whatever the case may be, and then it ended up coming in a little bit. Otherwise, I'd be looking for, some type of parabolic over 4. I'm going to assume that level is going to be key because that's where they blew everybody out to, and look for failed follow through momentum. So I have a small position left compared to what I had, but I just let it work considering where I was long. But reactive trade for me, I think we're going to have just a fantastic opportunity. So we'll see what happens. JAGX, which is kind of the reason why LMFA took off. Hopefully we have another great opportunity. Same kind of wicks that we talk about, just even on intraday when they happen on the daily. And so held extremely well. I think shorts are in a deep spot here. However, there was a good kind of filtering out a lot of shorts into the close. So I actually was going to hold it over, but then I was like, you know what? I'm not going to deal with, a 5-6 open or something like that on a Monday. I'll wait. I'll be patient. And, you can see, what I look for, right? So look left, and you can see that this 445 was a pretty exhaustive level, right? They exhausted a lot of people out. And then you can see, there's a lot of basically 420 tops over here. And even as it came back late after hours, it was the top as well. So I identified the 420 in the room as a key level because if you saw it in the tape, there was a 200,000 share offer and they were absorbing. They were starting to play, trying to create something. And so it became a key level. And so that's going to be kind of my range to anticipate. If it breaks out, I'd love for it to kind of squeeze through these two levels and then react accordingly. Otherwise, I'd be watching pops with a goal of 420 as sort of that peak and then potential fade from there. So we'll see what happens. Pretty crazy move again. We're in just an incredible market. So it had that BNGO feel like I talked about. And here we are. So we'll see what happens. But volume's good. Shorts are likely there. A lot of people might not understand, why it's up and overstay and then end up in a bad spot. So we'll see what happens. FT, higher the better. Nice reactive trade. Like I said in the room, about 99% of people should avoid it. I got in there with some. I used probably about 20% of a position pre-market. Then it started to ramp up a little bit, so I stopped. And then it went into a couple, a circuit halt or two. I think just one. Ended up getting short, and I pretty much held it, the core of it, throughout the most of the day. and I covered into the flush, like I said, in the room. And for now, tomorrow, this week, my goals are going to be, this level, higher the better. Ideally, we get some type of push, 750 to 8 range, looking for failed follow through momentum. The key really is just letting these things push out, not being part of the problem. You don't need to get to the top, and let other people do that. Let other people get exhausted out, and then pick up the pieces. Like I always say, let the dip buyers become pop sellers, right? You don't want to be part of that cover and then get all exhausted out and miss the trade and see it fade. We did that on CNET, and just real quick, over here, just like I talked about in the room, let them push everybody out. You can kind of see that, there's a level there, 430s or so, and you've got basically a top over here at 4. So until 420 is exhausted out, that was the level that I gave in the room. Like, assume that it's going to pop up, push everybody out until it starts to fail at 420s and get heavy. I don't want to anticipate anything. And then you want to assume that 4 is going to fail. Then, as you can see, it comes back and retests 4 a few times, and confirmation. We always talk about confirmation. So we got that confirmation, and that's a great example of being patient and waiting for post-exhaustion, not being part of the problem. Riot. This one, let's see what happens. It was up big after hours. We've got Bitcoin back under, we've got it at 38,000 now. It's starting to come in. This is the first pullback so far. I don't know if you can see it. I don't know how well this will work, but you can see it's coming in here. And so, Riot and Mara are going to be completely dependent on how Bitcoin reacts. So if we're at 35 in the morning, these things are gapping down. If we're at 45, these things are gapping up. So we've got some big trades coming here, major squeeze. Now, when Bitcoin starts to come in, don't underestimate how far these things can come in. And I'm not trying to get too short biased, and I'm not trying to say that Bitcoin's coming in. But if Bitcoin stays heavy, if Bitcoin continues to fail, and it goes 38, 37, 35, 32, don't underestimate what Riot can do. But as I said, you got to be cautious over the weekend. You've got 2 days of exposure. So, trading Mara and BTPT, for example, which, it's going to come in fantastically at some point. But when you are trading these things over the weekend, or especially a long weekend on the New Year's or Christmas, 3 days of exposure, you can't do anything. What if Bitcoin went 20K to 40K? It did. It did. So shorts got absolutely demolished. You couldn't really hedge. What are you going to do? You're just going to buy Bitcoin and you got to chase it up 100%. It's difficult. So, that's why these names have rocketed the way that they have. And you have to, understand that there is such a premium in these right now because shorts got ran over. So when Bitcoin starts to pull back and it starts to unwind, do not underestimate what can happen. You just saw that on QS. You just saw what could happen on QS. Same kind of thing can happen if Bitcoin ever pulls back, which it is right now. Let's go into failed follow through. So as you guys know, I do the main watches. So those are the main watches, 4 main watches. That's it. So tomorrow morning, I'll have 2 that I plan to trade right off the gate, and then 2 more as my secondary watches. So when you look at a scan and you see a bunch of names and you say, oh my gosh, there's too many. That's not what it's about. It's about being familiar with these things so that when and if the trade comes, you're prepared. So for me, plug, Kramer talked about it. He said it was a little overextended, so it came right back in. Higher the better. I think that it's pretty obvious. We talked about the 5250 level. So you can see that there was fantastic trades if you covered into the flushes under that level. You want to assume that this level is going to hold. You can see that they held it, right over here. They held it here, here, all through here. And, there is those air pockets that we talked about in between. And if you're not there, then you're going to get squeezed back up. So anyway, I love this potential trade, and you can just draw a couple lines to help you out. This is very simple to do. Any software could probably help you out with that. But to the upside, you pretty much got 54 and to the downside, 52.50, 52.20s. Inside this channel that I posted, you should assume that it's going to be choppy. You should assume that if you start to get sized up, you're going to get chopped around. Same thing with PLTR and all these other names, JKS, NEO. If you're trading within this tight channel, you start to size and then it reverses. I mean, look at how, it looks like it's going to fade and then bam, right up to the top of the channel. Then it looks like it's going to break out, bam, right to the middle of the channel. So let's see what happens. Higher the better. Hopefully we go 55.60. You never know in this market, but we'll see what happens. CNET, we just went over. I ended up keeping some of this short over, we'll see what happens. I had a great average, great short in the room. Posted the chart in the room later on, and so hopefully we've got another opportunity in the morning. If it's not a gapper, hopefully it ends up being like SOS. That was a nice one. I was short, as everybody knows, on Thursday, and then you wake up to this, and it was a great way to start the day. And I think that's why Friday was such a good day. Is you wake up with this, and then you have a lot of wiggle room to really expand on that morning's game. LG. So anyway, back to CNET. The key levels, I think, just simply drawing levels. 290s for failed follow through. You should assume and hope that we've got some type of push out to 320, 340s. The reason I look up to this next level is because if I'm starting to short into the 320 push, I don't want to be emotionally involved if it goes to 340, 350. I don't want to be freaking out and covering. I want to be, I want to be emotionally disconnected, wait for it to blast everybody out, and then pick up the pieces on the backside. So again, it doesn't mean that I won't start in. I'm just not going to size in until that backside starts to form. So we'll see what happens with that. We've got LG HL. They had a filing pre-market that made it go nuts. Fantastic short trade throughout the day. Posted that chart as well. And then they PR'd the same thing that they did in the filing. And, it popped after hours. So we might have another shot at that. I think that your key levels, it pretty much peaked. Looking left again, you can see that this level matters, right? So that's why we look left. And, it doesn't mean it's always going to hold, but it's a good starting point to assume that that level is going to have trouble. If it starts to base over that level, that's when you want to be, cautious of the potential squeeze. And you can also see this base, and look at that. It held that base. So those are your two key levels. If we start to base over 520s, I would expect a squeeze. If we start to peak at 440s, I would expect a fade. And, I would probably use VWAP as my risk in both scenarios. QS, nice one so far. Higher the better. This is, I had the short swing. I compared it to Fubo. I put that idea on Twitter, and basically I wanted that secondary unwind after the bounce. And, we've got the flush, rallies up, it squeezes. But then later on during the day, it unwinds like crazy, and we got that exact move. So if we take a look real quick, you can see, how it ended up, coming in, squeezes out, unwinds that day, and then once again, always look left. It doesn't have to be exact, but it's just that area of interest where you do not want to get emotionally involved. You don't want to be covering into this parabolic. That means you were in too big. You were trying to find the top. So even if you are short ahead of this, you want to at least give yourself a little bit of room. So, an example like this, coming in pre-market, my goal was versus the 72s as my risk, and we ended up getting that nice fade. So again, hopefully we get some more breakout, potentially back over 60, 62, and then fade off. I could see this kind of settling into the mid 50s, but if we start to hold trend over, consolidation and it starts to hold a bit, I don't want to fight it in this market. IDEX, another example of what's working in this market. So as you guys saw, I got long on Thursday, and you've got this morning move, consolidate, a little bit of an ABCD type setup, and you saw me get long right here. I posted the entry and the prints, and I did not have one single sell until after hours, and then pre-market the next day. And a situation like this, you've got that morning move, consolidate, pushes up, comes back, retest, right? So we look for that confirmation, comes back, it holds. So at this point, for me, I like the risk versus VWAP, and that's exactly what happened. And just kind of steady up. So that's the same deal. If you guys remember the IZ EA, this was on a prior Sunday video. The same thing with UAVS idea, which was at $3. Same kind of situation, same kind of stuff where you look at that daily chart, you look at the intraday chart. When these things line up, you want to let them move. And UAVS was an idea because of MVIS. So you'll see that all these charts are the same. And that's why I started to look at Boxel. You want to assume that it's going to fail. But as it builds over 180 and as it builds over 2, then you might start to have a nice situation like IZEA, UAVS, MVIS, and all of that. So that's what's working in this market. So that's why I took IDEX. Had a huge move in the past. It's a former runner. It's the right market for it. And so I went ahead and went with it. So higher the better. And I'm thinking that we could potentially get a little bit more fail. For me, I'd prefer to see it kind of get into this 320, 350 range, blow off, and then potential failed follow through. Switching over to the long side on the continuation ones, GSHI. So this one, I was, sometimes you overhold things, and sometimes you either hold too long or you sell too soon, right? It's never going to be 100%. So I had been swinging this for a little while, and pretty much was up double, at $1, and I was, those names had been running 1 to 2 to 3, so I wanted to, I'm going to let this one work. And obviously it pulled back, so I had trimmed some, but I've been in there the last couple days, currently long. But like I said, I would assume that it's going to fail until 80 starts to build. If we gap up and it starts to hold over 80, then this is the type that can go $1, $1.20, $1.50 short term, on this first move. And then, whether or not it consolidates, they have a lot more press, things like that to support the next move. We'll see. Or if we have shorts, all that kind of stuff. But for now, I like the fact that the dips are getting soaked. I like how it sold off for most of the day, and then all of a sudden it came back randomly. So I like that type of action. That's what I want to see. I like the fact that it also gapped up for a couple days and just kind of failed. And there we go. So we got this first move, and then the next day it gaps up, fails off, but it's kind of basing, right? It's forming a base. So the thought process there is just like a lot of these other names where actually the WBAI swing idea, where you've got this original cleanup move, and then it sells off, and then it goes again, and the buyer comes back. So whether or not that move to $1 was somebody positioning in, then they let everybody else that wants to sell, and then they come back to it. We'll find out, and I think the confirmation of whether or not they come back into it is if 80 starts to base. DDD, we'll see what happens with this one. This one's been wild. I haven't really traded it too much. I got long right over here at about 1980, 1970 that day, and I made it to about 21 or 22. That was the only trade that I had on it, and if you look at it, maybe it's a good thing that I left it alone, because I don't know whether or not I might have tried it short and been squeezed. But this type of action, 13 to 25, back down to 19, back down to 19 again, back up to 31, almost 32. That's big range. So you can make a lot here, you can lose a lot here. So the key is really just focusing on trend. You can see how it's focused on the VWAP levels. And I think we're going to have a nice trade on it. But I wouldn't be too aggressive just because of what it's shown so far. It is having the field day on shorts and longs, and you want to be cautious. TIGR, you guys know the deal here. I've been, I spelled this trade out all through here. you know, it had earnings over, I think it was this day. And my goal was to quietly accumulate dips. And once it started to show that there was a buyer in the tape, which we had a buyer this day, and since then, you know, we've got that cleanup day that I just talked about, just like the WBAI, just to show you again, WBAI, got that cleanup day, and then they start to come back. We had the same thing here on Tiger where it had the cleanup day, pulled back, and then they came right back. This day here came in, came all the way back. Consolidate, we talked about the wicks. So now it's in go mode. Potential, you know, 12 to 15 short term, we'll see. I've trimmed a little bit, but you know, it's been a solid trade since the high 5s, 6s, and you know, scaling from there. So hopefully you guys participated at some capacity. If you saw a trade there, it's been a phenomenal one for anybody that watches. Last couple charts that I just like, and I've got a lot of other ones, but CGA, there's not much to really say on them. OEG, TRXE. TRXC, I'm currently, well, I'm long all of these. You know, the CGA was a game plan last week on dips. You can see buyer in the tape, relatively thin name, but you see the cleanup move here. You see another cleanup, and then the bidders come in since. OEG had an offering. You know, I've been long for quite some time. You can see the wicks that we talk about. Been trading it in and out around a core. TRXC was an idea, you know, this day, had a huge move, sold a bunch of it, and the goal was, you know, let the chart consolidate and then get back in there. So for those of you guys that are in the room, you guys saw when I got long on Friday on TRXC, so that was nice. CYCC, nice trend, no position at the current time, but I'll be watching to potentially get involved. Nice chart breakout here, and again, buyers in the tape, and we're near a breakout. So you want to assume that it's going to fail, but at some point, if it busts through, it should be a nice little breakout. And then I've got all the staying familiar, you know, all the trades that I want to just, you know, be familiar with. Tesla, obviously, we need to be, you know, have it up at least. I think that there's going to be a big trade there, but you know, I don't know. Are they going to blow out the 900 calls, the 950s, the 1000s? I mean, that's all a possibility. So I don't want to throw that you know, off radar when there could be a potential 50 to 70 to 100 point down day after some type of blow off. I did actually forget. I took NEO off radar. This was going to be a main radar. So they had NEO day this weekend, or I guess it's Friday night, which is their Saturday. But I think we're going to have another big opportunity here. Ideally, this thing goes 62, 65, maybe even 68, and then pulls back. But I think we're going to need to keep this one on radar. And, you know, I could go on and on and on. But if you guys click through to the website and check out the Staying Familiar, you'll see a bunch of other stocks. A lot of them I'm long, just swing trades, letting the trades work. And you know, that you'll see that the charts are the same, and that's what I look for. I look for buyers in the tape. I look for that consolidation, the swipe consolidation, swipe consolidation. That's been working really, really well right now. So, and once again, as I said at the beginning, we've got the resolution sale right now. So if you're looking to come on board with our Investors Underground, now's the time. We've got a lot of great deals, and you know, it's time for you to figure out a process rather than just kind of keep on, you know, throwing money at random things and hoping that it works. It's a great time to compound and exponentially grow your accounts, and you know, without that proper process, at some point it will catch up. So I want to make sure that you guys do have that proper process. I want to make sure that you guys do know what makes a good trade and what makes a bad trade. And that's it. We'll see you guys in the room tomorrow.